Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
प्रिय, मैंने तुम्हारे लिए तोहफा लाया है।
अति सुंदर। तो आप ही क्यों नहीं पहना देते?
Hey, hi.
Hi.
I got your gift.
Gift?
Gold.
Gold. Where is it?
Don't look at my face. It's in your mobile.
Oh, it's e-gold. Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting video wherein we are going to discuss 5 different investment avenues that have changed over a period of time, and also we are going to talk about 2 investing styles. Basically, we are going to compare traditional style of investing versus modern style of investing. Well, if I'm talking about traditional finance versus modern finance, the term finance includes a lot of terms like what? Like savings, investing, banking, budgeting, mortgages, retirement planning, tax planning, investment avenues, styles and what not. But out of all these, we are going to focus only on 2 points like I mentioned. One is investment avenues and the other is investing styles. So let's start with the first investment avenue, which is investing in real estate. Well, back in the time when HNIs wanted to invest their money, it was a no-brainer for them that yes, investing in land or building or farmhouse, that was like a clear-cut choice for them. Well, for them, ticket size was not a problem. But if I'm talking about middle-class income groups, for them, maybe investing a big chunk of, let us say, 50 lakhs, 60 lakhs, that was a big challenge. But then this big ticket size problem was solved in the modern era, where the concept of REITs was introduced. Now, what is REIT? REIT is a real estate investment trust, wherein you get to own the real estate, not actually owning a physical piece of land or a physical piece of building, but you own the unit, and the unit is nothing but unit of that REIT. What do you get in return? Number 1, you can also get benefited from the capital appreciation, and number 2, you can also get dividends every single specific period. It could be a quarterly payout or could be a yearly payout as well. If you want to know more about REITs, you can check out the links in the description below. I hope you have understood the first investment avenue, which was about real estate. Let's move on with the second one, which is about investing in gold. Well, back in those days, if you had asked in any household, the scene would have been typical. The bread earner would give his wife a specific amount of money to run the monthly expenses. But out of that money, the lady would make it a point to save some money out of that and to buy at least 1 gram of gold. But what was her logic behind this investment? Number 1, liquidity. Number 2, capital appreciation in the long term. And number 3, if she wanted, she could also exchange this gold to buy jewelry. But then what was the biggest negative point in this sort of gold? The biggest negative point was the risk of loss by theft. What was the solution for that? Well, the solution was found in the modern finance, where digital gold or e-gold was introduced. Just to give you a few examples, gold Bs or SGBs can be examples of digital gold. If you know about SGBs, you get a fixed rate of interest at 2.5%, and also when you hold this SGB till maturity, that is 8 years, whatever capital gain you get, that will be exempt from tax. One more important advantage of gold Bs and SGBs is that the ticket size is very less. Gold Bs can be bought in multiples of as low as 0.01 grams, and SGBs can be bought in a ticket size of as low as 1 gram. If you want to know more about SGBs in detail, you can check out the link in the description, and if you want, you can continue to the third interesting avenue, which is about, oops, there was no such comparative in the traditional finance. Did you guess it? Well, let me tell you. Back in those days, let's come back to the modern era. Well, I hope you have guessed it by now. The name of this asset class is cryptos. This asset class emerged in the early 2000s, and by today it has gained a lot of popularity. If I were to talk about returns specifically from 2020 to 2021, just have a look at these charts of Bitcoin and Ethereum. BTC rose by more than 1,576% in the span of March 2020 to November 2021, whereas ETH rose by almost 5,104% in the same time frame. But once it reached its all-time high, what happened after that? Well, these cryptos fell down by almost 75% and 82% respectively from their all-time highs. But then what happened after BTC and ETH hit their recent lows? Well, if you have a look at this, BTC recovered by more than 22%, whereas ETH recovered almost 80%. Well, by now you have surely understood that any crypto can be categorized under the high risk, high return category, and all these are truly volatile in nature. The returns are surely eye-catching, but be aware that past returns cannot be a guarantee of the future returns. Well, other than returns, what can be one more biggest advantage of this asset class? The biggest advantage is accessibility. Anyone with an internet connection and a compatible device can invest in this asset class. Well, not only retail individual investors, even big institutional investors have started investing in cryptos. Well, I hope you have understood that how retail individual investors and institutional investors have also started their investment journey in cryptos. But what about you? If you have not started your investment journeys in cryptos, and if you want to do that using one of the simple apps, you can check out the link in the description below, download CoinSwitch Kuber app, and once you do that, you can get BTC worth ₹100 free of cost. So don't forget to check out the link in the description below. Before you move on, please remember that this asset class is in the high risk, high return category. So two important points. Number one, DYOR, that is do your own research, and number two, invest only a party fund amount if you wish to. Well, I hope we have understood everything important points about cryptos, and with that, let's move on with the fourth investment avenue, which is mutual funds. Well, back in the time, there were only regular mutual funds wherein, I'm sure you can very well correlate to me, wherein people used to go to their friend who was the mutual fund agent, and he used to tell you that, okay, this mutual fund scheme is the best. Why? Because he used to get more commission on that fund. Well, keeping utmost faith in your friend, you used to buy that mutual fund scheme. But then the expense ratio would be surely higher in such schemes. What was the solution for this higher expense ratio? The solution was found in the modern finance with the help of direct mutual funds. In this case, you need not have any commission agent in between. You just need to have a compatible device, an internet connection, and you can directly invest through the direct mutual funds. Because no commission agent is involved, the commission involved is very less, the expense ratio is very less, and because of which your profitability can be a shade higher. I hope you have understood how investing in mutual funds has changed over the period of years. Now with that, let's move on to the next investment avenue, which is fixed deposits. Why was fixed deposits one of the most popular investment options back then? It was mainly because of safety and liquidity. But can you recall how did you make a fixed deposit back in that time? Let's have a look at what happened earlier. First, you would be required to go to a bank, then fill a form, ask the bank to debit your saving account, and then open a fixed deposit, then give some additional documentation, and tada, you would get that fixed deposit in a nice physical format. Envelope okay, whatever, yes. But then if you were to renew that, again you were required to go to the bank. If you were to withdraw that, again you were to go to the bank. So what was the biggest drawback back in that time? It was lack of convenience. But if we come back to the modern era, the problem of convenience in fact has been solved with the help of technology. With the help of mobile banking apps, now it becomes very easy to renew FD or to make a new FD with the help of a mobile app. Has anything else changed? Yes, even the types of FDs have also widened. Just to give you an example, if I'm talking about a Flexi FD, no, you don't know the concept? Okay, let me explain you. Assume that this is your saving account and you tell the bank, okay, I need only this much money in my saving account. If the money is in excess of my requisite amount, automatically transfer it to a Flexi FD. So in this case, you just give a one-time instruction and your FDs are auto-generated. I hope you have understood how FDs have changed over a period of time. With this, now let's move on with the investment styles that have changed. Well, let's start with the first investment style that has changed while investing in the stock market. Back in those days, you had the option of investing in stock markets only with the help of a full service broker. While the full service broker used to give you a bunch of facilities of not only helping you to buy and sell the stocks, they also used to provide us with wealth management services, portfolio services, option calls, recommendation and whatnot. But because they used to give us a lot of services, of course, the brokerage charges were pretty high. To solve this problem of high brokerage charges, in modern finance, the investing style changed of investing in stock market with the help of discount brokers. Discount brokers only help you with essential services like buying and selling stocks, and because they offer you only limited services, the brokerage amount or the brokerage charge is also very less. I hope you have understood the small difference but an important difference between full service broker and a discount broker, and with that, let's move on with the next investing style. Well, in the previous section of the video, I hope you have understood that how the investing style changed while investing in the stock market. But did the style of investing in mutual funds also change over a period of time? And answer is obviously yes. Back in that time, only one investment style was possible for investing in mutual funds, and that was lump sum investing. So if you were a salaried person, the overall saving itself used to be less, and investing a big chunk at a time used to be the biggest challenge. But how was this challenge overcome? That was overcome in the modern finance, wherein in the year 1993, the concept of SIPs was introduced. With this introduction, the biggest advantages were that you were able to invest a small amount of money, and that too every month. Nowadays, you can also invest fortnightly, or you can also invest every week also. With the SIP feature, the biggest advantage again is that you get a nice cost averaging. So even if you are investing in falling markets, your overall average cost goes pretty less. I'm sure everyone knows that SIP is possible in mutual funds. Nowadays, SIP is also possible in stocks. But is SIP possible in cryptos? Answer is obviously yes. If you are using the CoinSwitch Kuber app, then you can start your SIP with as low as 100 rupees. So what are you waiting for? Just check out the link in the description below, download the CoinSwitch Kuber app and start your investment journey. If you do that with the link in the description below, you can get BTC worth rupees 100 free of cost. Well, I hope you have understood that modern finance supports something like direct mutual funds. It supports something like discount brokers. While it saves on the cost part, one problem is that you need to be updated if you were to know about all these newer and newer methodologies of investing in different investment avenues. But how do you do that? Answer is in front of your eyes. You just need to hit the subscribe button, you just need to hit the bell icon, you just need to hit the like button as well, and share this video with maximum friends so that they also get to know the difference between modern finance and traditional finance. Well, if you want to know more about what's in my portfolio, you can click here, and if you want to know more about crypto winters, you can click here. Till then, take care, Jai Hind and bye-bye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.